Indus Equity Advisors joins in on the show right now to talk about whether or not there could be a meaningful move on Reliance, and if so, what are the triggers in place? Sushil, hi, good morning. Good to have you on the show. Sushil, retail and the digital business of Reliance now contributes to more than 50% of the overall EBITDA versus around 35 just about 2 years ago. Tell me, how do you see this pie increasing and the contribution of these two divisions? Where could it be headed in the next 2 years?
Good morning, Aisha. Thanks for having me on the show. Reliance story, as we've known, that oil and gas has been a cash cow, which has supported Jio and retail where they stand today. If you go by domestic growth pattern, I think telecom and retail both can compound a 25% growth over a period of next 3 years, because Reliance is spending huge. And second thing, we all know that where Bharti's ARPU is reached and where Reliance is intending. So let's assume with all the services which are bundled, Jio's ARPU also moves towards 250, 270 compared to Bharti at 300. It as a compounder, the same way retail footprint and the domestic environment which is led by RBI policy currently, I think domestic consumption is bound to see upgrowth. Urbanization is happening, and looking at both, I think the footfall where Reliance is concerned on food business is concerned, clothing is concerned, or any other experience on digital and otherwise, retail, I think both can grow at 25%. It's the most important part is how the retail business is energized and becomes more profitable from where they stand today on the margin basis. Telecom is doing reasonably well, but the services have to improve where the margins can improve further.
Absolutely. Completely get that. Let's just bring out how the stock price of Reliance as well has been panning out and what the stock has done in the last 1 year. And then since April, when the markets did actually recover from those, tariff lows, or till March end perhaps. And then from there, they made a one-way move up. In the last 52 weeks, while of course there's been a lot of chop and churn in Reliance, but it's down about almost 4% And I want to see what the data from April to now is in the last 2-3 months, that is, where Reliance has actually moved up. In the last 6 months, of course, it's been an 11.5% uptick that one has seen on RIL. But that's where the price action is. Let's see what the last 1 month performance for RIL has been. That, of course, is the last 3 months, wherein it's moved about almost 170 odd points. And that's a meaningful move that it's seen. But in the last 1 month, again, done nothing. It's pretty quiet there, down about 0.5% or so. But Sushil, what happens to Jio in specific? Do you sense that going forward, one could see a better improvement in the ARPUs from Jio as they continue to add more and more subscribers and beat the other incumbents as well? And do you sense that the street is now penciling in perhaps another round of tariff hike when it comes to ARPUs, or Jio specifically?
I think tariff hike is definitely on cards. Whether it happens within next 6 months or 6 months down the line later, that has to be watched out. But the experience which Indian consumers demanding of services, whether it's cricket match, television, other sports, various other content, and the amount of individual traveling on the street or on the road for travel for work, the consumption is definitely bound to increase. And second thing, mobile services are definitely adding more and more packages. International roaming is not that good experience with Jio today compared to Airtel, but people are happy with the price bundling, what they have been able to offer so far. As the services improved, ARPU will definitely look at a better point. Second thing, you may refer to all the recent reports which has come out from Bernstein, JP Morgan and other Citi. All are valuing Jio around 600 rupees, 620 rupees, and some of parts you can calculate with others. So, but I personally feel where Indians are concerned as urbanization and domestic consumption, whether it's retail, rural, or here, it's increasing. The ARPU is bound to increase, and 25-30% growth over a period of next 2 years should not be a challenge.
All
All right. Good morning, Mr. Choksey. This is Shrishti also joining in. Yes, of course, the biggest debate around is that with respect to the analyst, what will they actually go ahead and value more? Will it be the traditional oil and gas business? Will it be retail? Or will it be Jio for a matter? So give us some sense that if one has to really look forward beyond 1 year, which segment do you believe will be the key outperformer there in terms of the SOTP valuation, if you can help us?
So SOTP, which the market is based on institutional research which is available, Jio is being valued between 575 to 625 rupees. Retail is being valued again at 600 to 620, 640 rupees. Oil and gas is at 50 rupees. Oil to chemical is approximately 400 rupees, and new energies are approximately 50 to 70, 80, depends on company to company. My personal thinking, till the companies are not separate, you cannot give a separate PE. So on an average PE based on the net worth and EBITDA, which is at approximately 1,85,000 crores, should be heading to 2,10,000, 2,20,000 crores next year, and then 2,50,000 crores. So if you multiply by 11, 12 times EV to EBITDA, and I don't know what the debt number is because the new energy business, hydrogen, what will add to oil to chemical as well as the divisions. Till the separation of three entities are not visible to shareholders on an individual case basis, I think you can put it that the 20 lakh crore market cap in 2 years has a potential to grow at 40-50% in a thumb rule basis, because domestic consumption over the next 12 to 18 months is estimated to be better. One is led by RBI's direction of a lower interest rate. Second thing, a lot of global manufacturing businesses are coming to India, which will need a lot of raw materials, and Reliance supports some part of raw materials. Urbanization and domestic consumption pattern showing a healthy with FMCG and electronic consumption, Reliance can have a small pie there also. And looking at new energy business should fructify, starting with solar, only module manufacturing, and then backward fully integrated and hydrogen sometime in 2026 or 27. We need to see. I think overall pie seems that it's a proxy to India's population. And like a bank you buy for India's proxy, Reliance will become a proxy because it has all the businesses possible. I won't say all the businesses are showing very, very healthy margin which the shareholder would like to see, but possibly the act would be in place over a period of next 12 to 24 months that the margins improve, businesses improve, and the cycle of the market is on a healthy space right now, barring the challenges which are emerging with too many wars happening. If things stabilize, I think market will perform well for Reliance over a period of time.
Back to the point that you were making about Jio, do you sense that Starlink could be a threat? I mean, that of course holds true not just for Jio, but for the other telco players as well out there.
I think looking at the price of equipment and the charge, how many Indians would need it? It's very basic necessity only for a few selective businesses where you can't reach out, that you would upload a Starlink or an industrial use where Starlink is required. So I don't think either of the telecom players will see a threat. And second thing, they both have signed up with Starlink. So we do not know what is the understanding of how the business will roll out by Starlink along with Reliance and Bharti.
And Mr. Choksey, before we let you go, would you be able to comment on Jio Finance, if at all? Because recently we've heard that Jio BlackRock has received SEBI approval to launch their advisory business. What kind of business do you believe this vertical will generate, and overall, how is that going to contribute to Reliance?
I hear that Jio has launched a lot of products competing with Bajaj Finance and consumer durable financing, LAP loan, share finance, MSME finance. They are buying a lot of existing assets from AAA and AA kind of companies at a reasonable rate because they get money cheap. But if you're looking at a size, barring the Reliance shares which are held by them, the business size is not grown to a size which should value the company very richly. So I am fairly okay with where the market is expecting and trading. But if you're looking from a seriousness, I think the act would be visible only after 12 to 24 months, where the might and money both would be put to work, because basically in finance business, the money which is being channelized through borrowing or this cost of funds is going to be cheap for Reliance. But the execution team reaching out millions of consumers for all the businesses, it takes its own time. So one should not, I think it's fairly valued. I think mutual fund business and other business which they're starting will take a little time before we see the real act of Jio Financial Services.
All right, Sushil, with this, we let you go on that. Thank you so much for taking the time out and giving us a sense that what's really been happening within Reliance and what's the way forward. But with this, viewers, it's now time once again to slip into a very short break. Don't go anywhere. We'll be right back with more.